Hello, Business 600-day students. This is Professor Hasse. It's Thursday, March 23rd, the last video, hurrah, hurrah, of this accounting and finance online course for the Spring 1 session. We'll just be wrapping up a couple of items about to finish up and get you prepared. Again, I will have office hours this evening if any of you want to talk to me at our student hours at 6 o'clock on Thursday evening. If not, I'll be available all weekend if you have any last minute questions. Again, remembering our class is now in its final stages. We have the case study paper, which is due this weekend if you're on extension, and the final examination is now out and about, as they say in Canada, and due this Sunday to wrap up our course and to achieve your final grade by Thursday, March 30th. Also, I'm requesting you to participate in our course evaluations, which the links are located in the final examination. And so if you would like to take that course evaluation, I would appreciate it. Also remember, as by the looks of the roster, I'm going to be having a couple of our students in this class in my Business 630 class next session, which is in a couple of weeks online, and look forward to seeing you all there. Business 630 is corporate finance, the last major finance course of your MBA program. And we'll be using a lot of the same disciplines and look-sees from this class in that class, especially capital budgeting. Okay, and also if any of you going into the future would like a recommendation letter, I know one of the best things I ever received in my college career was being able to get recommendation letters from a couple of my professors. I stuck them in my personnel file, and then when I applied for a job or needed some references down the road, brought up some of those letters of recommendations from a faculty member, and they were very, very helpful. So again, if any of you would like a recommendation letter into the future, it doesn't have to be right now, but down the road, I'll remember you. And I'll be more than happy to do a letter of recommendation for you, and for a job, for further graduate work. Please don't do that anymore. You're done. And anything else you may need down the road as far as a recommendation, please feel free to ask me. I'd be more than happy to serve as a reference for any of you. You're all good students. All right, here's where we are right now. We're in the midst of doing our final examination, which we did an intro video a while ago. And we're in the process of cleaning up and finishing up week number 8 in our Blackboard. Week number 8 is about, there's 2 videos, 2 parts. I had to split them up because of technology issues, but 2 videos talking about budgeting and capital budget analysis. And the main problem I want to look at here is that capital investment analysis, because that's going to be a prerequisite as you wrap up your MBA program in Business 630, or even your capstone or final 695 class. So let's take a look at that problem one more time. Remember, a key part of finance is to make sure you take the information that the accountants and the controller's office of a business gives you, and you project what has happened in the past to what is going to happen in the future by taking a look at what your expense structure is, how you price things, what your marketing strategies for your products, how much working capital are you going to need, and what's going to be the salvage value of some of these assets. Putting that all together into a capital investment analysis where you can project into the future whether a project is going to be profitable in that. And we took a look at a couple of examples of that, where we had the accounting income of a company, which is taking into account the revenue, sales, expenses, depreciation, and coming up with a net accounting income. At the same time, we take a look at add back in depreciation as positive cash flow to get a cash flow. So in capital budgeting analysis, it's 2 big numbers. The bottom line is net cash flow, but you do use accounting income and add to that any additional funds like depreciation because it's non-cash. So it's technically you're making $168,900 a year instead of 53,009 because that is cash 168.9. Well, you take that 168.9 and divide it into the investment. In this case, the investment is 480,000. It takes about 2.84 years to pay it back. But one of the two key analytical numbers of this is the net present value, where you take the discount rate of the accumulated cash flows over the depreciable life of the asset, in this case 4 years, and discount it back using net present value at 7%, which is your cost of capital, your cost of money. That discounted cash flow then is compared to the investment year 0, and there you have a positive return, in this case of $92,100. Again, this is the accumulated cash flow over 4 years that's totaling 675,000. But what is this 675,000 actually worth today when you take into account the cost or the interest expense, 7%? Thus, you're going to make money, but not as much money as you think you are because you have to include the cost of capital in your analysis. If we want to see what that is in a percent return, we use what is called the internal rate of return method, which is taking the return over year 0 through year 4, and in this case, coming up with 15.23%. Those are both return analysis key figures. Then we took a look at another problem in problem 24.2, where again, we are told what our project cash flow is over 4 years. We're told that the investment is 350,000. In this one, the discount rate or cost of capital was 8%. And then we have this one, net present value of 125,290, a higher rate of return. Naturally, when the NPV is higher, you're going to have a higher interest return. And then I took a look at the payback method a little bit differently. Here it's 2.44 years. Remember the payback method here, we took the yearly payback and divided in the investment because the yearly payback was exactly the same. Well, it's still exactly the same, and as you can see, it's exactly the same in this problem, but I wanted to show you another way of doing it. Here's the investment. And at the end of the first year, we still have $206,500 to pay back. 350 negative cash plus 150.43.5 positive cash. At the end of 2 years, you add in another 143.5 for year 2. You still have $63,000 to pay back. So that's 2 years, still haven't paid it back. And then you take in account in year 3, adding in the year 3 project cash flow. And now it's positive. We have paid back to, at the end of year 3, have an $80,500 positive cash. Well, how do we determine the payback? What I do is I take the year 2, in this case, what we still have left to pay back, and divided it into year 3 cash flow, and it's roughly 44%. So it's going to take us 1, 2, and 44 or 0.44 years to pay back because we need almost half the year 3 to get to that $350,000 payback level. What some companies do, they actually calculate it to the day of that year, taking 44% of 365 days. You can determine what actual day you will pay that back, but that's getting a little geeky. But those are 3 key return analysis for it. And what they tell you is if this net present value is positive, if the internal rate of return is above the discount rate, and if you pay it back in roughly half or 3/4 of the time, it's a successful investment. You're getting your return back. And that's what a lot of companies judge. They take a look at these 3 ways: dollars, percentage, and years on how a particular asset is going to pay back the investment over time. And the investment is the year 0 investment, taking into account the revenue and expenses generated over the depreciable life of 4 years, and then discounting that back at the cost of capital. We'll get into this in a lot more detail in Business 630, but for our purposes in this class, this is a perfect representation of how you judge in finance the return off an investment in an asset. And every company in the world does this in a variety of different spreadsheets, accounting downloads, all the time. Very important to know in finance. This is where accounting and finance really come together. The accounting information is provided to you by is giving you the accounting income, the projected cash flow. And then you project that out into the future, and then you turn to finance by discounting this analysis to a net present value and a return on investment. It's using accounting data to estimate the revenue and sales off a particular investment and then converting that into a return analysis with these three figures. And that's where accounting and finance meet. And that's how we end our class this spring, with that closing of accounting meshing with the financial management items of a business, and off you go to the races. So that summarizes, and that pretty well sums up our 8 weeks of spending and getting to know basic accounting, debits and credits, journal entries, trial balances, posting to the ledger, doing adjusting entries, another trial balance, doing the financial statements, closing the books, and preparing the books for the next upcoming fiscal year. That accounting financial statements go to investors, go to bankers, go to the external users of our company. And then we turned to managerial accounting, looking at internal ways of looking at our accounting information, variable and fixed costs, cost of goods sold, what it takes us to produce and determine a selling price of a unit. And when that information, then we get into more of the financial aspects of it. What is a break-even analysis? How do we determine when we make money based on knowing variable and fixed costs from our managerial accounting studies? And then that leads us into what if we invest in a certain amount of money in an asset, what is that asset going to generate in sales, expenses, and net cash flow? And can we project that out as whether that's a profitable investment before we even make the investment? And that's capital budget analysis. So that's our course. And in the process of these last couple of weeks, you're putting together a financial statement review of a company that you selected, which is a great experience to understand how to read and understand what companies are, how they're doing externally. And then we switch more to internally review of investment assets in our final week, and then that's summarized in our final examination. And our final examination is a series of overview questions about our course, what I just talked about: financial accounting, managerial accounting, how to determine a selling price, how to determine what our variable and fixed costs, and determining a target price. Here's a capital budget analysis, a little bit more detailed than we've saw in chapters 24.1 and 24.2, but it still gives you the information, the investment in the year zero, the cash flow being generated over the 5-year, in this case, depreciable life, and the return of NPV, IRR. Here they give you profitability index, which don't worry about now. Business 630, you will, and the payback in years. And I asking you in this capital budget analysis, in your interpretation, is this a viable investment of 750,000? So what we just talked about in those questions in chapter 24, if you see a capital budget analysis looking like this, would you consider this a profitable, worth a venture in investing in this asset of 750? And I wanted a couple paragraphs of review of this and your interpretation and explanation of whether yes or no, this is a viable investment. And then finally, we look at contribution margins, we look at budgeting, and then we're done. And that's a great review, especially for an MBA student who does not have much accounting background or finance background, the basic key disciplines of each of those studies. And you're all doing it quite well. And then remember, at the last page of our final examination, please, when you're all done, after everything's posted next Monday or Tuesday, go ahead and click on this. and you can answer, please, and answer a couple series of questions about the course, about the book, about me, or whatever. And please take the time if you could do that. It'd be very helpful to me and to the university. Remember, it's all anonymous. Nobody knows who anybody is. I don't see these results and probably until the summer, but it does give the university and our college a good feedback about our program. And if you could take the advantage of that, because you guys are the epitome of our College of Business program. You're MBA students. It doesn't get any more. It doesn't get any more experienced or better than the program that you're in here at the University of La Verne. So thank you again. So as we wrap things up this week, please feel free to know that you can contact me, and you can, if you have any last minute questions. And as I post the grades early next week, if you have any questions or follow up on that, how your grade was determined, I post all the solutions and the answers to Blackboard early next week. There is no real solutions or answers to the case paper because it's all individual interpretation of specific companies, and everybody has a different company. So, but if you have any questions about how I graded your work, please feel free to ask me, because you're entitled to the right answers about how you did everything. Well, I want to again say thank you very much for all your uh, keen interest. This is not an easy subject to cover in 8 weeks at the NBA level. You all have done a super job, and I thank you all for your participation. And I hope to see you all again in another class, or when you graduate. I hope to see you at graduation when you get all finished. It'd be great to meet you and your families in person. So again, thanks a lot for a great spring. We'll see you down the road, and good luck on your final. Adios.